Greetings everybody, Sive is here again with the ForexPeaceArmy.com. Let's update our view on the cryptocurrencies. So last time when we talked about this on Monday, we said that, well, it's clearly signs of weakness, and we suggest that chances for a drop of the Bitcoin stands significant because it has actually failed the opportunity to follow the potentially bullish patterns that were forming there, and was not able to proceed with them. And actually, as we discussed last time, especially on intraday charts, on the hourly chart, on the follow time frame chart, it was evident signs of the weakness. Usually when the hand shoulders pattern is ruined, that we actually had on the follow time frame chart, if you remember, on the ruins of the hand shoulders, very often butterflies, downside butterflies are appeared, and that particular the thing that we have got. But let's go step by step, because on the high time frames, on the weekly and on the monthly chart, it's also lots of things to discuss. Starting from the monthly chart, the situation starts looking worrying by the two reasons. First reason is erasing of the potential grabber. Yes, the November stats is just started. Maybe situation will change. Who knows? Maybe by the end of the November, market will close around 120. In this case, we could get second grabber in a row, suggesting upward action. But for now, market is testing the lows of the previous month, which is not good. Second, it's based on the classical shape of this candle, which is actually high wave. And as you know, the breakout of the high wave, the true breakout of the high wave open road in the direction of the breakout equals to the length of the high wave pattern, which is approximately 103 up to the top 127, 126. It's approximately $23,000 Bitcoin. It means that in case of the breakout, we will drop down somewhere to an 80, back to the yearly pivot point. And that might be absolutely different story, because as we also talked about this Monday, that could start forming the head and shoulders pattern on the monthly Bitcoin market. It's very important. So the idea of the possible drop down to the 80 comes not only from the monthly analysis, not from the analysis of this candle, but also based on the weekly background. So take a look what we have on the weekly. In fact, drop was stopped only by the daily weekly oversold area. So you can see the pullback that we have is just a reaction on the oversold that we've got here. Lows was broken, so you can see its market stands below it. And market right now is challenging and entering the previous consolidation. So I specifically marked it with this rectangle. It's previous consolidation. Usually consolidation works like follows. Market usually protects the borders of the consolidation, preventing price to return back in them. But if price returns inside of it, it gets chance to move freely inside of the consolidation in opposite border, which means that once market will return right back down, start floating in the same range, the door down to the 80 area or even 90 area will be open. So here market freely might be floating to the downside. That's why this is actually very important. And if we wouldn't have the oversold here, it's really a big question what will happen around. So it's easily market could just keep going lower, because in fact market already was standing inside the range of this consolidation. So meantime, on a weekly chart, but maybe even better could be seen on the daily, but here is also something like hand shoulders might be suggested. Yes, it doesn't have really perfect shape. The upward extension is more than 1618, but some shape of the hand shoulders might be suggested, right? So it might be kind of the shoulder head, some pullback here might be another shoulder, and continuation could follow. So this is definitely the pattern that we need to keep an eye on. Currently, at this point of view, probably it's not best opportunity to consider new shorts because market stands at oversold. Currently, we expect a pullback reaction, but this pullback will not be the changing of the bearish sentiment. It will be just technical reaction on the support and oversold area. Now let's go down to the daily chart. On the daily chart, it's very interesting stuff is going on. So first of all, you remember our previous suggestion of the possible diamond, and this diamond was more or less in a row with the grabber that has appeared on a monthly chart. Suggests, well, at least if even we will not get the breakout, maybe we will see the pullback up to the top where a grabber might be completed, and then maybe reversal could start. But situation, you can see, has changed. So here as lows have been broken, and I have to extend this support trend line as market reached. Currently, this border is useless. Market has not started the upward action. And, well, I can't theoretically move it here if we still suggest possible upside reaction. But who definitely could say that this will happen? So let's keep it in this way by far. Also, we have to bring some symmetry back with extension this line as well. So let's keep for now this shape, although maybe we'll not use it in the future. But this is big perspective. Let's stand here. For us, it's more important what's going on at the bottom. So take a look. First of all, the 105, 106 comfort support area on the daily chart has been broken down. Market has completed 127 extension of this butterfly. And you can see how it has been completed. Really fast downside acceleration. It means that after some pause, market really could keep going lower to the 1618 extension, which extends 95.65. But it's not all yet. Around this point we have fib level 94.23, and here we also have this AB equals CD target with the OP around 93.34. So you can see rather strong support cluster. All this stuff stands very close to somewhere low levels of this consolidation. 94, it's inside of this range. That's the nearest destination to the downside. In the current situation, market can't keep going lower because they were sold on the weekly chart. And if I plot here the stiletto predictor, you could see that it also oversold on the daily chart. And that's the reason for the bounce. But as I said, this bounce is not the changing of the sentiment. This bounce is just technical reaction on the targets and on the oversold area. So as potential upside target, if we take a look at the performance on the 4-day frame chart, that's the hand shoulders that has failed. That's what we talked about this last time. Butterfly has appeared on a ruin, right, that we have discussed on the daily. Here we have also local minor ABCD target around the same area, and market stands on the bounce. I would consider retesting the broken conference previously support area. Now it will be kind of the resistance. Here it will be previous lows. It's 3 lows around it, and conference resistance level 105.58, 106.46. It's right here. So that's probably will be the destination point where a theoretical market could reestablish downward action. So let's keep watching. So currently we do not consider any new shorts, waiting for a bounce. For a long entry, I do not see any good stops, except maybe very small time frames. If you drop it to the 15-minute chart, maybe you will find something with the same target around 106. But this very small time frame, overall context remains bearish, and where we'll be watching for on the downside of the market. So besides finally, let's take a look at the hourly chart. Here market has formed nicely looking double repo buy, but it almost has reached this minimum target. It stands around 105. It's 50% resistance of the whole downside thrust. So here's clear shape of the double repo. You could see it on the bottom. So that's actually what we have on the Bitcoin market. As a bottom line, sentiment remains bearish. Price action is rather strong, which tells us that this is probably just a minor reaction, so retracement. And we were watching for a testing of the previous bottoms around 106 area, where we consider chances for taking another short position. Now odds to reach 95, 94 area are rising.